How America's debt spiral could spark the next crisis. Is the government of the United States, which is responsible for the safekeeping of the principal reserve currency of the world, unknowingly directing the economy in the direction of a catastrophe that it has created? It is more than just a political talking point. The relentless accumulation of the United States national debt, which is currently surging past $35 trillion and climbing, represents a profound structural risk that threatens to destabilize global financial markets, trigger catastrophic inflation, and fundamentally undermine the economic and geopolitical dominance of the United States. The current trajectory is worsened by high interest rates, required spending increases, and severe political polarization, which is pushing the nation into a fiscal debt spiral. This is a situation in which the cost of servicing the debt begins to expand faster than the economy itself. This is in contrast to earlier eras of high debt. This essay makes the case that this unsustainable cycle is not only an issue with the country's finances, rather, it is the single most significant threat to the stability of the global financial system, and it is laying the groundwork for the next major catastrophe. 1. The components that make up the debt spiral. The term debt spiral refers to the situation that arises when the obligations of a nation's debt become so substantial that the interest payments on that debt become the most significant and rapidly expanding component of the national budget. These programs are constitutionally entitled, which means that Congress is required to support them without having to engage in annual appropriation battles. As a result, it is extremely challenging to alter or reduce these programs. Due to the structural imbalance, deficits will certainly continue to increase regardless of which political party is currently in power. 2. The surprise of interest rates. For several decades, the United States did a lot of borrowing in an environment with low interest rates. The Federal Reserve has been increasing interest rates since 2022 in order to battle inflation, which has resulted in a significant increase in the cost of borrowing money over this time period. Any increase in interest rates, no matter how slight, can result in additional interest costs that amount to hundreds of billions of dollars each year. The United States of America is continually refinancing maturing debt at these new higher rates. This means that the interest payment line item is rapidly surpassing vital areas such as spending on defense and research and development, and it is becoming one of the largest single expenditures in the government budget. 3. The primary deficit. This is the gap that happens even before interest payments are taken into consideration, that is, the difference between income from taxes and expenditures by the government. Second, the domestic repercussions, which include stagnation and crowding out. Domestically, the direct repercussions of the ever-increasing debt are being felt almost immediately, notably through the distortion of the economy and the reduction of the flexibility of the government. The government engages in direct competition with the private sector for available money when it issues enormous amounts of treasury bonds to finance its debt. This results in the private sector being unable to invest as much as it would want. This competition, which is referred to as the crowding out effect, causes interest rates to increase for any and all parties involved, including homeowners and businesses that are looking for loans to expand their operations. As a result of this increased cost of capital, private investment is slowed down, which ultimately results in decreased productivity, slower long-term economic growth, and ultimately, a drop in living standards. The enormous debt burden creates the risk of fiscal dominance, which is a scenario in which the central bank, the Federal Reserve, is eventually pressured to keep interest rates low in order to make debt payments affordable for the government, even if doing so means failing to effectively fight inflation. This risk is created by the enormous debt burden. It is possible that the United States government could face insolvency, which is a danger that cannot be completely disregarded if markets lose confidence and demand higher yields. However, it is more likely that huge inflationary pressure will be exerted on the economy as a result of the Federal Reserve being obliged to effectively monetize the debt. This latter scenario would lead to a significant reduction in the value of both incomes and savings. The threat posed by the reserve currency is the third global repercussion. At the moment that it poses a threat to the position of the United States dollar as the preeminent reserve currency in the world, the debt spiral transforms from a national challenge into a threat to the entire world. Loss of confidence in de-dollarization. The United States dollar serves as the foundation for international commerce, finance, and the reserves held by central banks. Its strength is that it is fully dependent on the widespread conviction that the government of the United States is trustworthy and has full faith in it. This faith starts to deteriorate when the debt ratio continues to spiral out of control more and more. Major commercial partners and geopolitical enemies, particularly China and the BRICS nations, are actively looking for alternatives to the dollar. The United States' ability to finance its deficit at a low cost would be substantially reduced if it were to lose its reserve status. This would immediately result in a decline in the value of the dollar, an increase in the cost of imports, and a fundamental shift in the global balance of power. 2. The shockwave of the global financial system. U.S. Treasury securities are widely regarded as the safest asset in the world and serve as the foundation of the entire global financial system. Trillions of dollars are held in these bonds by financial institutions, businesses, and central banks all around the world. If the spiraling debt of the United States leads to a catastrophic occurrence, such as a default, even a technical one, owing to a political failure to raise the debt ceiling or a drastic loss of credit rating, it would set off a crisis that would affect the entire system. As a result, the value of these safe assets would plummet, which would start off a chain reaction of bank failures, capital flight, and a global credit crunch that would be even more severe than the financial crisis that occurred in 2008. To put it simply, the current structure of the global financial system is not designed to withstand a crisis of confidence in the market for United States Treasury securities. Finding your way through the financial cliff. The spiraling debt of the United States is a slow-motion catastrophe that is driven by structural expenditure requirements and is made worse by the political dysfunction of the government. Reforming entitlement systems, creating credible long-term budget plans, and ensuring that any additional debt issuance is channeled toward genuinely productive projects that boost the nation's long-term economic potential are all necessary steps to achieve the solution, which demands a painful commitment from both parties. If such firm action is not taken, the seemingly limitless ability of the United States to borrow money will suddenly meet its limit, which will cause an economic shockwave whose effects will be felt all over the world. For the time being, the globe continues to be dependent on the perceived security of the dollar, but each year that passes without any action being taken takes the nation and the world closer to the brink of financial collapse. Do you think America is headed for a major crisis? Like this video if you're concerned, subscribe to track the countdown, and comment below with your prediction. When will the interest payments become too much?